Yes, the Reserve Bank has kept the cash rate on hold at the record low of 0.25%. The Governor, Phillip Lowe, did release a statement this afternoon and he says the economic outlook remains uncertain. He says Australia's economy is going through its biggest contraction since the 1930s, with more than 800,000 jobs lost since March. But the economy is starting to show some signs of recovery and has stabilised recently. The downturn has been less severe than earlier expected. The nature and speed of the economic recovery, though, remains highly uncertain. And joining me now is AMP Capital Chief Economist Shane Oliver. Shane, reaction to today's Reserve Bank decision?
No great surprises in terms of the decision to leave monetary policy where it is and the measures all in place. What does seem a little surprising is that they haven't made more reference to the uncertainty flowing from Victoria. The Governor does point out that the immediate future will depend very much on controlling the virus. But at this stage, the Reserve Bank doesn't seem as concerned as I thought they might have been about the outbreak in Victoria and the threat that poses. So that surprises me a little bit. But by the same token, the Reserve Bank does remain very dovish, continues to repeat forward guidance, which is basically that it's going to do whatever it can, but also keep monetary policy very easy and not raise interest rates until there's a lot more progress in terms of meeting its goals.
New South Wales is closing its border with Victoria at midnight tonight. Shane, what impact do you think this will have on Australia's economy?
That's a good question. In the great scheme of things, providing freight can travel between Melbourne and Sydney, between Victoria and New South Wales, then I don't think that the closure of the border has a massive impact. The problem is in terms of what it really signals, and it signals that the problem in Victoria has got worse. The Victorian economy is a big chunk of the Aussie economy, the Australian economy, nearly 30%. That obviously, to the extent that the shutdowns, the lockdowns in Victoria worsen, then that will have an impact on the national economic recovery. And recently we have seen some faltering in high-frequency economic indicators. Today, ANZ Roy Morgan reported another fall in consumer confidence. It's still above the lows seen in late March, but it has come down. We saw a decline in services conditions reported by the AIG, and other indicators have come off a little bit. So we had been seeing a decent recovery. Hopefully that will continue. But to the extent that there are these concerns about the lockdown in Victoria having a direct impact, and also the indirect impact as Australians more generally become perhaps more cautious again, then that does pose some threat to the continuation of the recovery we have been seeing since April.
Shane, yesterday Deloitte released a report suggesting Australia's GDP would contract by 3% this year before rebounding 4.7% next year. What's your economic prediction for Australia's outlook at the moment?
Well, oddly enough, we're a little less optimistic than them. We're looking for a contraction this year of around 4% and a rebound next year. I think we have a rebound next year of around 4% as well. So in the great scheme of things, not similar, but we do see somewhat weaker conditions this year than Deloitte does. The only thing I would say, though, is that a lot depends on not having a general shutdown in Australia. If the breakout in Melbourne and Victoria spreads to the rest of Australia, then, of course, all bets are off and we may not see the extent of the rebound next year. Now, hopefully, it's just, if it does occur, it's just a delay in that rebound. But I think there is more uncertainty than would normally be placed around economic forecasts in this environment.
Shane, on the 23rd of July, the federal government will release a financial update. What size deficit are you expecting this year?
A big one, probably around $100 billion. If you look at the figures up to May, it was running at $65 billion, almost $60 billion worse than had been projected in May. But since then, of course, in June, we will have had another round of softer economic conditions, so less revenue going in Canberra. But more importantly, a lot of extra stimulus, JobKeeper and the extra payments coming out through June, I think will have blown the budget deficit out to $100 billion. The question, given that's in the bag, that's all history now. I guess the question is, what does the budget for next year look like? We're still going to see a big impact from the support measures through the current half year, particularly the September quarter. But I suspect we should allow for another big budget deficit, potentially again around $100 billion, particularly if the government has to extend the stimulus measures beyond the end of September, which I think it will have to do.
Shane, thank you for joining us. Kieran, no surprises here at Martin Place. The Reserve Bank's kept interest rates on hold at 0.25% and probably will for the next few years.